Welcome back to the second edition of MyStockScanner Live. We are powered by 3-Point Playbook. Wednesday, we kick things off, and today we keep it rolling. My name is Jesper Behrens, and with the dynamic duo that is, hence Henrik Nielsen and Liam Farrell, we make sure that every stock we cover faces the same questions as in the 3-Point Playbook. Is it a quality stock? Does it have an upside? And is the timing right to buy it? As said, that's the 3-Point Playbook and the way that we do things. And it's a tool we use. And this year we, and when I say we, I mean the two of you, have managed to rake up a portfolio that notch up 32.5 upside. How's that possible?
Well, I would like to say that we were some sort of geniuses, but actually, it's just having a structure, basically finding the quality stock, finding them when they're cheap, and trying to time them, get quickly out of the bad stocks. That's basically it.
And it is a thing that can be taught. That's what you guys do all the time. You do it
Indeed.
on your webinars, you do it on the various things, and you use the same tool, and you try for the portfolio, aim to sort of have a 20% upside and a 10% drawdown. Just quickly, the drawdown, what does that mean if people should be new?
It's a measure of your pain, basically, on what you can take on and how much your portfolio or your value of your shares and your cash will go down from the absolute maximum. If you've got £1 million invested and you lose 20% of that, you've just lost $200,000. Or £200,000. So that if you think that would be a tough thing to bear, you can't bear a 20% drawdown. 10% is where we are.
I would say that the satisfactory thing about our strategy is that we have quite a lot of members that do better than us by following it. Yeah. So if they're a bit less conservative, just copying the strategy in itself and then taking some more risk will give better results.
Well, so far, that little number, and we will be looking into the details of the portfolio on Monday. That's what we do every Monday. On the show today, we have something called non-farm payrolls. That's on deck. We'll get back to that in a second. We also have stocks in focus in our show. That will be Alibaba, Novo, MT Highguard, and the last one is thanks to an email sent to us. We are very susceptible to emails. We will be trying to answer all your questions. All you have to do is send us an email at FOMO. I think most people know what that means, fear of missing out. We're going to talk about that today again. So it'll be FOMO at MyStockScanner.com. And since it's Friday, we have our feature Friday face-off, two stocks that go up against each other. I don't know if you have a preference on Big Mac and Whopper, because it will be McDonald's versus Burger King later in the show. I'm not going to ask you for how many burgers you can eat, but I will ask you to guess what the number of the day is. Another feature we open the show with every time, and you at home can guess what we're talking about. The number today is a price. It's a cost price. $220 million. And that's for the cheap one. It can go to 400 million.
I think that's on you. That's for you, Liam.
It does sound a bit techy, doesn't it? Maybe it's the starting cost of an NVIDIA data center or something like that. But yeah, no
it's
idea.
Definitely not the price of a Tesla right now. But let's not get into that. We're not talking Tesla, even though they're down 5.1%, and somebody's smiling very brightly here on the show. We're talking about non-farm payrolls. They're supposed to come here at 2:30 in the afternoon here in Europe, Central European time. But guys, do we get it?
Yeah, let me see. I was actually hoping that I could show my screen here, but for some reason, let's try and maximize. Okay, here we go. As we can see down here, we get the non-farm payrolls. It is set to come in at 2:30 here in Denmark. However, we don't think it will be here because there is a shutdown in United States. So they have shut down BLS, which is Bureau of Labor Statistics, which are the one that comes out with these stats. So my guess is no. I don't think we'll get them. Oh, there we were.
Liam, do you know if we'll get them? Do you have a better guess or a different guess? Let me say that it's not a better.
I haven't got a clue, just generally, but in this one particularly. What I do wonder though is I don't particularly follow football. I can't stand it on the television or anything like that. But I do remember 30 years ago, Alex Ferguson got benched, didn't he? He got sent up into the top of the stadium, and everything managed better when he wasn't there. So I just wonder whether this shutdown could be a good thing for businesses. They'll actually get off and do some good rather than getting meddled with.
Okay, so far on the shutdown, but no non-farm payrolls, whether or not we will get them or not, that's to be seen. I know one thing they're mulling in the White House because I saw that in a headline, and people are guessing that Trump is ready to write a check that he's going to send to every American. It could be $1,000, it could be $2,000. Hans Henrik, what's that all about?
Well, it's mainly marketing. He talked about it on when they ran the Doge under Musk, where he said, well, all the money they raked in, they would share that out, $1,000, $2,000. That obviously never occurred. And now he's talking about it again because the tariff starts to hurt. If we just look quickly at what happened under COVID, this is what is called the Fed's balance sheet. That means, oh, sorry, you can't see my screen. That would be opportune if you could that. Here we go. This here is basically how much money the Federal Reserve, the central bank in US, is pumping out. And as we can see here, under COVID, when everyone got stimulus checks, the money was just pumped out like crazy. It was something like 40% of all dollars that were ever printed were printed in these 2 years. However, people were sitting at home. They were getting stimulus checks. So what happened to all the risky stocks were this. This is then ETF called ARK Innovation. So all stocks that didn't make money, but there was some potential, some great tech in, they just skyrocketed. That could happen this time if Trump gets his stimmy check through. I don't think it will. I don't think it will come. I think it's hot air, to be honest, this time.
So basically, it could be just pumping money into a bull market already going on all cylinders.
When we do this, when people get more money, I was just reading up on the research, and what happened back in 2020 and 21 was that most of the inflation was caused by an overall global inflation. But you could see that the Americans started to import more and paid a bit more for their imports because they had more money to spend. And even though it was only a couple of $1,000s per person. So there will be a spike on inflation if they start pumping this out. I don't see how they can give these stimmy checks because they are also going to spend the tariff money on farmers and on 10 different other things. So it's almost like, yeah, they need these tariff money for something.
But Liam, I know that you wrote an article that's already up on our site right now and on social media where you can take a look at it, because we're talking a lot about right now a fear of missing out. And that is because the tech industry is going absolutely berserk. And you are looking into the energy side of it. We'll get to that in a minute. But let's just look at the fear of missing out moment there is right now, because Alibaba was up by 3.6%. Hitachi surged today by 10% because they just, well, basically a press release saying we have a partnership with OpenAI. Boom, that's 10%. We should go into stocks and make our company a stock and claim that we have a company or we're working with OpenAI, and we're up by 10%. Is that how it works?
It does seem to be, doesn't it? Everything is just like a self-feeding loop at the moment, where you just mention the words AI and you add an extra 0 or 3 zeros onto the end of the valuation of your company. I mean, the market is driven by the hype. The last couple of years, the overwhelming theme in the industry of the investments has been AI, and the spend that's going on, a massive amount of spend. It's not showing any signs of really slowing down. The Chinese are wanting to keep up, and at the base of it is you've got the big hyperscalers like Microsoft, like Meta, all of those companies, Google, all facing an existential threat that says that if they don't get to that big AI moment where they've got actual general intelligence, or they've got an AI that actually really works particularly well, then that's it, they're over. The first person to hit that mark is probably the Ascendant.
That's going to be the last man standing, so to say. But Hans Henrik, Alibaba, if we take a look at them, is it an investable stock? Is that where we should go? Is there any money in it? Is that really something? Can it even sustain the thing that they got going right now?
Well, that is a good question. If we look at it, Alibaba, we have actually talked warmly for it for a time, but you can see here it has a good quality. The earnings per share is going up, revenue is going up. That is what we like. However, the PEG ratio, where we compare the price earning to the expected growth, that is started to look ridiculously high. If we just look at the value chart here, this is simply too expensive. Let me just update the prices so we're a bit better here. But they are starting to look expensive. There could easily be some potential in there. And as Liam says, the AI craze is here. It's a bit like in .com when a water cleaning company changed their name to something ending with tech, and they skyrocketed 1700% in one day until people found out it had nothing to do with the internet. And it's a bit there where we are. Not to say that we are going to have a crash just next week, but it is getting somewhat ridiculous in some sorts. And if I may, just to finish the Alibaba case, it is on the expensive side, but there's definitely some potential in there. You can't argue with that, and they are a fast mover. If I may jump to the capex side, Jesper.
Yeah, exactly. Because I was going to bring that up before we go to the energy side of it, because now we just slipped to the Asian market here with Alibaba, but of course it's located on the American Stock Exchange. That's where we looked at it. But we will get back to the energy in the US. But the capex side is the total big tech's AI spending. We're going toward I think it's trillion. I don't even
Yeah,
dare saying the number. I know that it's not the same in Danish, but
yeah.
that's in
Well,
29.
just to make clear, capex means capital expenditure, and that is normally a word that covers what a company is investing in future growth, in building new products, new factories, developing new stuff, basically innovative stuff. And what we can see here is that this is a global capex. That is AI related, and this year that is on about $400 billion, and we think that is big. But what the Citigroup thinks is that within 5 years that would have been 5x up to above 200 something trillion dollars. That's 56% per year, which is a bit worrying since the earnings don't seem to catch up here.
Yeah, and again, we're sort of scooting around in numbers here, whether it's trillions or billions, is because it's two different things basically. In the US, a trillion is what, Hans?
Yeah,
In
well,
Europe,
what we in Denmark called billion,
yeah,
which looks like billion, that is called a trillion in US. So
yeah.
there is a lot of confusion there.
So the problem is you guys. It's not everyone. Everyone else completely
Yeah,
No,
I
understands it
think
outside
you're
of
right.
Denmark.
no,
So
Liam. The
yeah,
problem is you, and the reason why I say that is because you have put down the finger on what the problem is right now, especially for the US. For all these data centers, for all these AI chips to run, they of course need some energy, but they don't have it.
yeah. Well, they have it at the moment, but in about 2 or 3 years, they're not going to have it. The Department of Energy in the US put out a report in July saying that it was impossible to meet the anticipated power demands of the AI industry. And it's quite a heavy word, impossible. So I did a bit of digging, and effectively, a lot of the power transmission kit in the US is over 38 years old. It's well past its lifetime. They have to build 12 million large transformers every year for the next 5 years to start catching up. And they would need 500,000 skilled manpower to actually do that. And they haven't got that. Recently, they haven't really been advertising the US as the best place to bring immigrant labor into. I don't know if you've caught that. So that's probably not helped their
It's
case
almost
either.
like it's a
Also, this stuff.
disadvantage if copper, steel, and aluminium went up in price too.
But that's what I was going to say. Adding 50% tariffs to this stuff. Actually, we haven't even seen the the issues coming out of that, but that's actually just massively exacerbated the problem. China, on the other hand, this year has spent $166 billion on energy transmission from one side of the country to the other. They're well fixed for AI, and they, in my opinion, will probably be the winners.
It seems like they plan somehow. You can read more about the energy crunch that the U.S. is facing, because Liam did a piece on that and talked about that. Same goes with the many trillions that are being spent on AI in general on the Citigroup side of things that Hans Henrik talked about. We have articles up on that, and talking about things to come and power that we need all over the world, nuclear power. We have a webinar coming up on that, Hans Henrik.
Oh, yes.
So let's tease that. It's in 5 days' time, if I'm not wrong.
It's actually extremely relevant on the electricity side, because, as Liam says, there is a deficit of, or at least in the future, there is a deficit of electricity. The only reason why US can keep sort of up right now with China is that US have a lot less manufacturing that they did some years ago. So China is doing that now. The second they start to ramp up the data center, the need for electricity there, they're going to be in deep trouble. Trump has said that they will focus a lot more on nuclear energy, and I'm absolutely for that. The problem is that will take at least 10 years before that starts to have an effect. At that point, China has won.
Also, when China sort of build nuclear power stations, they build 6 on the same site at the same time in about a third the time that anyone else does in the world. So, the US got no chance.
And let's not comment on that. Let's shut down energy, other alternative energy things that could help them in the short term wise. If I look at the Danish market today, Vestas is down 3.2, and that's because Trump is defunding. Now we have the government shut down, so everything green is being defunded, and especially the Democratic elected governors in those states are being defunded at the moment. Is that the reason for the drop, Hans Henrik?
Oh, well, there are a couple of news out on Vestas, but my guess is that the major mover is that the so-called, what is it called, new green scam or whatever over there in US, that Trump is shutting everything down that just smells like green energy.
One thing he's had a focus on, that's also the Danish markets, of course, Novo and pharma in general. Big bank, Goldman Sachs, were out, and they are expecting another downgrade for Novo this year. That would be the fourth downgrade in a year for Novo. Let's bring it up on the screen and let's see what Novo looks like right now, because
it's coming up here.
We jumped into it, we jumped out of it, and it feels, I've used that in the first broadcast we did on Wednesday, like a little bit of a roller coaster.
Oh yeah, well, Novo, and that is the thing with our structure. Our strategy is that sometimes we get sent out of a stock that then keeps rising. That can be a bit annoying, but we follow our strategy. We bought it somewhere here, and it went straight down, and then we sold it. We never know if it's going to drop 50%. Then there was a news about Novo being, or at least the Pfizer, another drug company that were agreeing to something that Trump set up, an online pharmacy, and that kind of lifted the entire healthcare sector because people are hoping for less tariffs on these. It's true that Novo got it was not a downgrade from themselves, but it's right that there was a bank saying we think it'll be in the lower end of the estimates. That got the stock a bit down today, but they have actually gotten up again. So it might at some point be time for us to enter Novo again.
And we're not afraid to going in and out of stocks. And I'll get to you, Liam. We also we should be careful because those burgers are almost burning. So we need to get to those in a hurry. But again, as I said, we're not afraid to go in and out of stocks. We just follow the rules that we set up, and that's the major key in investment: is have a strategy. Stick to it all the time. Yes, you can change your strategy, but make sure you then follow that for a longer period. And you're not in it for the short run. An email we got from Peter Dahlum on FOMO at MyStockScanner.com. He asks something about MT Highguard. It's a stock that Well, he's kind of looking for estimates on it in the 3-point playbook and kind of going, there are things that I can't see. If we look at that, Hans Henrik and Liam, sometimes we don't have all the information. We simply don't have access to it.
No, we don't get it from our supplier, and it looks like no one does either. No one's actually got any analyst estimates on there when I've looked around. So, but what the company, when I was looking into this issue, what the company does have is some guidance that it gave out a couple of months ago. Actually, it's reiterated that guidance throughout the last 6 months, and that they're going to hit 400 to 450 million kroner in EBIT, earnings before interest and tax. We can extrapolate that to these figures here that Hans has got in his system to say actually their EPS is going to potentially drop between 7% and 17%. That makes it sort of not a particularly pleasant investment, sort of from the
So
playbook
Hans
point of
Henrik,
view.
it's a stock we wouldn't touch.
Definitely.
Yeah.
That doesn't mean it can't go up. It
No,
just
again,
doesn't follow our criteria.
Exactly. This with questions is free all the time. Just write us at FOMO@MyStockScanner.com. One of the things we have on the show here, and I know there's a lot of things that's going to be new when it's a new show. We have features every time that we broadcast. On Monday, we look at our 3-point playbook coming up this Monday. Wednesday, we have the watch list, and that's generated from our our users search on our website. And then on Fridays, we have the Friday face-off. And guys, I know you've been looking forward to this. The only thing that could have done it better was that I've had taken 2 beers and compared to each other. But I took 2 burger chains and said, let's have QSR, which is the brand behind Burger King. They also do Popeyes, Louisiana Kitchen, Firehouse Subs, and a lot of other things. But McDonald's is just McDonald's. Let's put the 2 stocks to the test. Which one would you buy? Which one of them?
You do realise that we went straight from Novo Nordisk, who does an anti-obesity drug, straight to
Why do you
burgers.
think it sells so well in the US?
Yeah. Well, to say the quality, which is our point one, is this a quality stock in the 3-point playbook? It actually turns out that both we call it RBI here, but basically the ticker symbol is QSR, so that's a bit confusing. There is a good quality company. We can see a lot of green in here. The McDonald's is a bit, it's also green, but we can see what's called the PEG ratio is a bit high. And if we scroll further down in the article, we can see that in the RBI, the Burger King mother company, we did that as a stock of the day yesterday. That looks extremely cheap compared to what they expect in future growth and the PE that has normally been paid. So even in the bear case, there is a 25% gain. That doesn't mean that it will go up 25%, but we're looking at how much risk are we taking compared to the potential gains in the stock. And this looks really, really good. McDonald's is also a reasonable case. It is a bear case at negative 7.5%. That is absolutely decent, and a bull case at 35. But comparing the point one and the point two, I would say that the Burger King company is definitely the winner.
Are you satisfied with that, Liam?
Yeah, no, they're good stocks, and our members know sort of which stock we went in yesterday, which one we didn't, so they got alerted to
Exactly.
it. So yeah,
that's the reason to stay member, is that you get the information.
And a quick disclaimer: we actually own the Burger King company right now. We bought it yesterday,
and it's not a recommendation. No. How many burgers can you get from $220 million? It's not the question.
But it's the latest inflation numbers, 5.
5, yeah. No, you can get quite a few, and I'm not going to speculate how much we go where you need after. But the price, it's a price of something. I said you can get one of these if you shelve out $220 million, which is number of the day.
Small nuclear reactor.
No idea.
It is the price of what an EUV machine that ASML built it cost. It doesn't do any chips. It builds the machine that builds chips. That's the price tag. And guys, it fires laser at molten tin at 50,000 times per second. I don't know if that makes it worth the price. And I just tell you what, the latest model, which is called High NA, that has a price tag of 400 million. That was number today.
And they're struggling to sell it as well.
Well, isn't it because they got Chinese competitors now? Is that right now they're almost the only one who can do it, but they keep claiming somebody else.
They are. Yeah, I think that's vaporware at the moment, but they'll definitely be there in a couple of years.
Okay, we're almost wrapping up the show for today. We will see if we get the non-farm payrolls numbers later today or not. Hans Henrik will be gone on Monday, and that's a good start to the week. No, I'm
For us.
I'm teasing you,
Yeah.
Hans Henrik. We look forward to you being back. In the meantime, don't forget that Hans Henrik will do his weekend wrap over the weekend. You can read that on our webpage. And then look out for all the articles. They're already up both on Facebook, but also on the webpage. And I'm sure there will be more to come if we get any reaction from the non-farm payroll side of things. We're at the end of the week, and I wish just to say stock up on ashi beer, because there will be a shortage in Japan after a cyber attack out there. And so if you were planning on that for the weekend, you might be in trouble. We're at the end of the first week of our show, back on Monday. Hans Henrik, you have a nice weekend. Enjoy your day off on Monday. Liam, we'll do the show on our own.
We will.
There'll be like
we will.
2 kittens in I don't know what shop, but we will be on our own.
I don't know what avenue
No,
you're going
I'll
down, but
better
that's
stop.
what we call
I'll
a
stop
fraud
while
attack.
we're ahead
Yeah.
here. That's it for today's MyStockScanner Live. Remember, investing doesn't have to be complicated. 3 questions, that's all we ask. Quality, upside, and timing. Smarter picks today, that means probably more confidence for tomorrow and the weekend. Use the 3-point playbook. Until Monday, happy investing and have a great weekend. See you guys.